Hello, everybody. Thank you so much for joining in. We had a little bit of technical difficulties, so I appreciate you all's patience. But I promise you, you want this great information today. We have on here today, slide, you can see. We have on here today the lovely Katrina Hart Lorick. We had a little bit of technical difficulties, so I appreciate you all's patience. This great information today. We have on oh, sorry, the little layover. You have to get on with Instagram, and so that's what you guys are in the background. But guys, we have the lovely Miss Katrina Hart Lorick on the line. Katrina, thank you so much for joining us.
Thank you for having me.
Yes, guys, Katrina has been in the industry now for about 30 years. 30 years in the banking industry, even though she doesn't look it. 30 years in the banking industry, 8 years with First Citizens. She is also a mother of 2 and a grandmother of 4 boys. Matter of fact, you just had a grandbaby, what, last month? Just came? Was it last month?
He's 8 weeks old today.
Oh my goodness. So they just probably getting loved up by grandmama too.
I would love to love them. They live but hey.
Guys, I'm so grateful when I'm able to have lenders such as Katrina on. She is a world of knowledge. We actually just literally closed on the deal yesterday. She has some great programs, and this is one thing that I love about doing these Tuesday tune-ins. If you're wondering about buying a house, guys, people always ask us, when is a good time or a great time to buy? Yes, it is. There are so many programs out here. There are so many things that are available that you don't see, that you're not going to see if you're going on the internet, which is why it's important to get yourself with an experienced agent that can put you in touch with these types of programs that, like what Katrina has. The main thing that we're seeing in the media now, and what everybody always asks us are about interest rates. And so I'm glad that we have this on now because of the fact, guess what, guys? Katrina has a program that they're rolling out, and she's going to talk about this, an interest rate reduction program. So for everybody who's asking about interest rates, I'm glad you're on tonight. If you know somebody who's looking to purchase or have asked questions, guys, tell them to get on right now to our Facebook Live. They can go to Deals with Angie, Angelina McFadden, on Deals on Facebook, Instagram, Deals W Angie. They can go to our YouTube, Deals with Angie. Tell them to go on right now because this is what we're talking about. And look, we already have people. We have people telling you, Brandy Clark says special. Congrats, birth of your grandbaby. Yeah. So, guys, I'm going to turn it over to the expert. Miss Katrina, you want me to go ahead and bring your slides up?
You can, okay? Yes, ma'am. Thank you, Angela, for that warm welcome. And thank you for sending business. I appreciate doing business with my special realtors. So you can go ahead to the next slide. That's just my information. We can always leave that up. It has the QR code on it if you need it. That's bring it back in about. I'm sorry, say it again.
I was saying I'll bring it back up at the end, and I also have a tagline with your information too. Yep.
That works. Thank you. So this is just a little bit about First Citizens Bank. We're the largest family-owned financial institution, and one thing that is really special about First, this is the main hub for our mortgage department. So the underwriting is done right here in Columbia. We're in over 22 states. We have over 500 branches. So we can do mortgages wherever we have a footprint. From California, Boston, Texas, Florida, of course, Georgia, North, South Carolinas, and wherever we are. So that's the good thing about it. But what we will be talking about today with that interest rate reduction is going to be applicable to North Carolina, South Carolina, and Georgia only. So I am homegrown, and so is First Citizens. So that's important to me. You can go to the next slide. And the next slide. So I'm going to follow along in with my own slides as well.
Okay.
So the interest rate reduction program is special to first-time home buyers, or anyone. Is not just for first-time home buyers, but it has to be your primary residence. It is not for people who are looking to invest, unfortunately. So sorry on that note, but if it is your primary residence, not have to be a first time. We have some rate adjusters that are applicable to a loan. You can get up to 1% lower than the rates that are available to you with other lenders. On yesterday, one of my teammates locked a rate for 3.5% interest. So that is huge as far as qualifying and affordability. So that is why we rolled this out. In addition to that, we have $5,000 worth of assistance in a grant that is non-repayable available to add to that loan or with our loans. So you can go to the next slide.
If you don't mind me just kind of making sure everybody heard that, you had one of your partners at First Citizens was able to lock somebody in at, you said a 3 point what now?
3.5% on yesterday.
So guys, they got locked off this new program for First Citizens, 3.55, and that's a fixed rate?
Yes.
That's a fixed rate, guys. So I hope it, so 3.55, 30-year fixed rate, and they can still be able to get $5,000 in a grant program that's non-repayable.
That's correct.
Okay. Oh, this is awesome. This is awesome.
So Angelina, if I'm not mistaken, the person that we closed with on yesterday was able to take advantage of some of those benefits that we offer, and 5,000 being one of the benefits that she was able to take advantage of. If you go to the episode,
I'm sorry.
No, you go ahead. Go ahead.
I was going to actually bring up that program too after you speak more about this one, because I wanted people to know more about that you had in collaboration too, that we was working on, because that was an awesome program as well.
So the reason I brought that one up because we added that $5,000 to another program that she was able to take advantage of. So the biggest thing is to know that it's available to you, but the rate reduction is available to anyone who household income is 80% or less than what we consider to be the area median income. Listen, I don't want to talk on a high level of how it's done. It is basically anyone in the area who makes less than a certain amount. The certain amount for starters starts out at $86,900. And that is household income, but there are some benefits that we can add to that as well, where you can possibly, if your household does not make more than $136,000 in the Richland, Lexington, Fairfield, Saluda County, Kershaw area. So that's a huge advantage of $34,000 of household income, and you can take advantage of this interest rate reduction. It is in a certain area, and one of the things I did earlier was, Angelina, I provided you with how to tell if the house that they're looking at is available. So Angelina and I will partner. She will know if the house is available for one part of it. You come to me, the income piece, I qualify you for that portion, and voila, you can qualify up to 1.125%. Doesn't mean you get all of the credit, but you can get at least 1% off of your interest rate, up to 1.125% less on the interest rate. Okay.
And guys, when people think about locations and driven programs too, like this, that you have to look at the addresses, they immediately think, okay, is it going to be in an area I don't want to live in, or do I have to be worried about that? We was just playing around with some addresses. I don't know if some of you are familiar with the Mungo subdivision, Ashcroft off of Clemson Road, brand new subdivision, beautiful homes out there. That area qualified for this program. Now it is a two-part piece, like she stated. We look at the addresses first, myself, but then she's going to check the income and she'll let us know if qualifies completely. But do not think that that your area, your preferred area, will not qualify. You want to check with us and don't rule yourself out, because I think you'd be highly pleased.
Now, what I will share with you, Angelina, is most all of Richland and Lexington County do qualify for the program. So it is just a matter of you having the desire to want to buy, and it also affords you the opportunity that, let's say you were looking and you got pre-approved for 180,000, but your rate was somewhere around the 7% mark, or maybe 6 or 7%. If we're coming in at 3 or 4%, then that may afford you the opportunity to buy 200 or 225. So it increases lots of purchasing power for your buyers as well. Okay, just keep in mind that it is available in only certain areas. Can you go back to the slide before that? I apologize.
No, you're fine.
No, and I'm looking at my slide saying, asking you to go back. Go. Is that? Yes. So go down one. I apologize. So go to the one where it says how to qualify.
How to qualify?
Yes.
There we go. Okay.
Yes. Little doggy. There we are. So in this particular, in what we look at are the areas, and like this available in Georgia, North Carolina, South Carolina. Angelina will qualify you. We will get you on to find out if the house qualifies. But it is for manufactured housing, and mobile homes also qualify. Single family and 2 to 4 unit properties can qualify. So we just have to know what it is you're interested in, and we will get you qualified for the loan. Now, the mortgage assistance grant, if you go down to the next slide, is the $5,000 that we can add to the loan, and it helps you pay for closing costs. With that $5,000, if your seller is not paying your closing costs, you can use it. The best part about that $5,000 is you can also buy rates down. You can use it for down. You can use it any way that you need to. There are some restrictions, like you can't use it for your realtor fees, but you can use it for anything that you choose to. Buying a rate down, third-party fees, settlement costs, all of those things there to buy the points down, or you can use it for your upfront mortgage insurance premium. So you can use the $5,000 any way that you see fit. The best part again is that grant is fully forgivable. It doesn't even go on the deed. So it is just $5,000 the First Citizens grants and or gives you towards the loan. They just give it to you as a grant. It is not a repayable amount. You're not required to pay it back. Okay.
Can I ask you a question? With getting that interest rate, that percentage, because you said it's a little bit over a percentage reduction for your interest rate. Can you use that $5,000 to take that interest rate down even some more?
If it is an option for you, yes. I don't know that it's going to go down much lower than where we would have it, but yes, you can use it towards the buy down.
Okay. And she's right in regards to, and the reason why she said it doesn't go on the deed. For those you all who don't know, when you're using programs like down payment assistance through state housing, a lot of people say, "Well, I want the free money." It's not technically free. It goes on the deed, and it is repayable if you sell your home, depending on your income, within 10 years or now 20 years. So they may not ask you for a monthly payment, but when you sell your home, whatever you borrowed at the time will be due. This $5,000 is as a credit, is as if somebody has given you this money that's taken off of the bottom line and is not going to be recorded on that deed. Is that correct? Whereas even if you sell the home, nobody's going to say, hey, you owe us $5,000 back. It's literally, hey, this is a grant that you get for being a homeowner.
That is correct. That is correct. That's huge. It's huge. And if you go to the next slide, we have some additional programs. We have tons and tons of programs. We do everything that any other lender does. Lending is truly an industry standard process, meaning that if we do it, it's the same thing that I did when I worked at Bank of America. But everybody is going to pull all three bureaus. We're going to all ask for this thing. But I don't like to talk about what everybody else does. I like to talk about what sets us apart. No one else is offering 1% lower on interest rates right now. I'm sure they'll try very soon, but that we're here to help home buyers get in homes. Okay. We understand what's happening in the market. We know that you can't, I mean, it is tough to save money to buy a home. So we're going to assist by the interest rate reduction program with the grant. And we have some 100% options available where there is a no money down program with no mortgage insurance added to it. Now, we did not talk about what mortgage insurance was, but again, another huge benefit. And Angela, we can talk about that on a different day when we talk about different loan types. But all of those things are benefits. This particular program, at a 640 to 659 credit score, there is a 3% down payment required, but anything 660 and above is 100%, and only $500 has to be your minimum contribution.
So you said 660 and above basically equals 100% finance.
So if you buy a house for 240, you can finance 240.
Put this on so people can see that. You see that, guys? 660 and above credit score equals 100% finance.
So let's say your credit score is at 659, then you can take that 5,000 that we're going to give you and use it towards your down payment.
Awesome. So even if you don't qualify for 100% financing, you can still get the $5,000 grant, which will still help you with your down payment of 3.5%. So let me ask you this: you can still get the $5,000 even with 100% financing to help towards closing costs or buying down the rate as well?
Yes, you can get the 5,000. That same $5,000. So it's 5,000 is the same $5,000. Yes.
Okay. And I know you didn't want to go into mortgage insurance, but I had a client ask about that today. Guys, if you want to know what your mortgage insurance payment, what she's talking about, go to your current mortgage statement, and where it says on there either mortgage insurance premium or private insurance premium, that's what she's talking about. This program does not have that, which means you're going to be saving yourself $50 to $100 a month off your mortgage payment. Not homeowners insurance, it's different, but that's the importance of it, is that instead of you paying for the life of this loan, you don't have to worry about making that extra $50 to $100, which in turn allows you to qualify for much more on a home as well, because we don't have to factor that payment in. It's awesome. It's awesome.
So Angela, a lot of people don't know and realize that mortgage insurance is based on credit score. And so based on a person's credit score, I just had a gentleman who was looking at a $300,000 house. His mortgage insurance was going to be $368 a month.
Really? Do you mind sharing the loan time?
Well, it was a 30-year fixed loan. It was an FHA, but my point is that's $360 extra money per month. That's not going towards the loan. Going to the mortgage insurance.
Yeah, those are your utilities.
Yeah, that's a lot of money. So
that's a whole lot of money.
Yes. So yeah, mortgage insurance is has its own separate understanding, but the one thing that usually drives a conversation, the first thing most borrowers ask about is what is the rate. And so with this, that's why I decided, the better thing for us to talk about initially would be the interest rate, because you're going to get a better rate at First Citizens right now, provided that you qualify in certain areas. So there are some things that we'll have to check, but provided that you qualify, we're going to help you get into the home. Okay. And
so
like I said, we do all of the other stuff, Angelina, and we do the medical loans. That's there. We do construction perm. We do lot loans. We do jumbo loans, which are and I know I'm going a little bit faster than you're turning. So
I'm sorry.
We do,
okay.
No, oh, yeah. So we do medical loans that have. I mean, it's very similar to our 100%. Lot loans, home improvement loans. We do tons and tons and tons of loans. Construction perm is unique in itself, but what is specific is we're local. I'm local. You make your payment locally. You got a phone call to make, and you go and walk into your local branch. So it is, but we are a bank, so we can do loans from every loan that anyone else can do. We just have some what we call portfolio loans, which means we do them and typically no one else does them. So that's huge when it comes to, I always felt like if I, did a loan in some other places that I've worked previously, that I could never find out what was going on with it. Whereas here, my team is here, I know where they are. I can reach out and help them if necessary. So,
and that's important, guys. In-house.
Yep.
Well, yeah, that's one of the things that's important. Everybody's in-house. And so with everybody being in-house, that's important to us, because when we are trying to find, as your agent, trying to find out what's going on, she doesn't have to go into the time zone and they don't get into this time, or they're in a different office and I got to see when they're able to get in. She literally can go always say, hey, do you know what's going on here with this loan? It's important. And then also, it is important for people to have their loan officers right there in hand. I've had that a couple of times with people like, Angela, I want somebody that I can be able to sit and talk across face to face, to be able to provide my information and to give certain things to meet and speak to them directly in regard to personal financial information. So guys, this is a great opportunity for you. And we do have a question too. One of the question was, will the PMI, I guess more the PMI or mortgage insurance premium ever drop off? That was one of the questions that we had for someone viewing.
So to make sure we understand PMI, what is PMI? PMI is the bank's insurance that the consumer pays in the event the consumer defaults on their loan. Okay? The bank's insurance that the consumer pays in the event consumer defaults on their loan. Will PMI ever drop off of a loan? FHA, maybe not so much, but at conventional, at 80% loan to value, let's make it simple. If you purchase a house for $100,000, now we're in a pretend world. You purchase a house for $100,000 and you owe $95,000. When you get to $80,000, then your PMI will fall off. If you request it at 78%, it automatically falls off and you don't have to request it. But at 80%, you can request it, and they will do what they consider a drive-by appraisal, maybe, and provided that the house has increased in value and or is at least still valued at what you purchased it at, is expected to increase. So you should be able to drop off at 80% if you ask your lender to have it reviewed at that time.
And a great reason why it's good to be able to get into their 100% loan, because with that, you don't have to worry about it dropping off because it would never be put on there. So that's another benefit. of doing 100% loan with First Citizens is that you don't have to worry about that extra fee dropping off because it's not put on there to be and financed at 100%. Now,
So
with that 100%,
go ahead. Let me add one caveat to that 100% loan. You cannot own any other real estate at time of closing. So does that mean that it has to be a first-time home buyer? No. But you can buy and sell the same day. Sell first, buy another one. As long as you don't own any additional real estate, you can get that 100% community opportunity. And we have a program, which is the home product. Luckily, I'm the only person in the Columbia market that can offer it that has no income cap. So that one is just a little bit of whipped cream on top of the ice cream.
And for those who are like, well, how can I do that? That's what we call in the agent world a dual closing, when we're selling your home and we tell you all the time, we have to close on your current home, then close on the next home. That's the reason why. So you are able to do this all the same day and qualify for this 100% program that she's talking about. And I went back to the slide so you all can see it too.
Thank you for that.
Well, and I don't know if I asked this before, so if I'm asking this again, because I'm still kind of coming off of how I've been feeling. That's the reason why we haven't done it the past couple of weeks, guys. I wasn't feeling the best. But can utilize the 100% and get the lower also on the 100% loan, get the lower interest rate, or you have to do it on a different type of loan, or will you all allow us to do 100% lower with the 100% financing?
Ask that question again. I want to be certain I understood.
I'm sorry. Can you be able to qualify for the 1% lower in interest rate along with the 100% financing loan?
So I'm glad you asked that question, and the answer to that is no. But you can get the $5,000 and buy the rate down some.
Okay, awesome. Okay.
So the interest rate reduction is applicable to conventional loans, the FHA loan, and the home ready. Okay.
Okay. All right. So FHA, conventionals, and home ready.
Yes.
And guys, if you all see these slides here, she has so many different loans, from medical, construction to perm. I told you we was gonna have to have a part 2, Katrina, if you come back.
I will be absolutely happy to come back. Yes, ma'am. Because we have tons of products. I think what is equally as important is what we look for as lenders. How to get qualified. Where do you start? And I think this is a very good segue into start with your realtor. Your realtor gives you. They don't steer you in any direction. Hey, here are some lenders. Here's what they have to offer. Try this person, and this person, and let's see what we can get for you. But if you're able to come and get down payment assistance, i.e. State housing, mortgage credit certificates, City of Columbia offers 20% down. So we utilize, because we are a bank, Federal Home Loan Bank, Angelina, also has a grant that we can add our grant money to. So right now I have a young lady who's qualifying $15,000 in her Federal Home Loan Bank grant. Added with our $5,000 is $20,000 in non-refundable. She does not have to pay any of that money back. They have a $15,000 grant as well as a $15,000 5-year non-repayable loan. So one of those two I'm gonna get her qualified for. I just entered her paperwork, and we are cooking with grease right now. So who doesn't want to get 20,000 down payment assistance?
Do you mind just sharing a light a little bit on the 15,000 federal grant? Could you share a little bit light?
So the Federal Home Loan Bank grant, Federal Home Loan Bank says, hey, we need to help buyers as well. So there is a $15,000. They gave out $2 million and said, let's use this in $15,000 increments. Well, that first 2 million was gone in a month and a half. It's not just for First Citizens, it's for all banks and anyone who takes advantage of Federal Home Loan Bank. Typically, those who use brokers, they're not able to take advantage of these types of programs. So the Federal Home Loan Bank gave out that amount of money. But it is truly a grant. It is 15,000 that doesn't go on the deed either. So you add that to our 5,000, you use it for down payment, closing costs, all of the things that we are using our grant for, you can use their $15,000 grant for it as well. Those typical programs are typically first come, first serve. So it is being certain that you get in, get it quick, get your money reserved, and go find a house so that we can close on your loan, get you in your house, and get the down payment assistance or the grants that are out there.
Well, you know, one of the things that I did not, I remember when the $15,000 came out years ago, because I did a post. I just yelled out $15,000 a whole time, you know, to catch people's attention. But I didn't realize it was still, and I know it's probably bad. I did not realize it was still around. So I'm glad that, and that's why I love tune is, because I learned so much. Because guys, you know, when we're on the phone lines getting updates for clients, we're getting updates for the file that's in front of them. You know, we don't really get a chance to talk to the lenders and have these discussions of, okay, tell me everything that you have going on. And so I really appreciate when lenders come on, because now I'm learning, like, wait a minute, they still have this on top of the $5,000. I mean, 20 grand to go towards your house. That is awesome as far as with closing costs, buying down, because you can use it to buy down your rate, you know, buy down a loan, you know, closing costs. I mean, that just puts you in a different ballpark when you have that amount of money that's being added and it's not attached to the deed. So you don't have to pay it back when you sell the home. That's very important, because when you get your next home, that $20,000 can make or break a deal easily.
Yes,
man, that's
ma'am.
awesome. We got to talk some
Yep.
more, Mr. We gotta talk some more.
I am here for the talk about lending. I love to talk about lending. I can talk about this from my sleep.
Look, I think we probably do. If you like me and you do this in your sleep, I do it all the time.
Oh.
So I would love to have you come back on, and possibly we could talk about more about the federal home grant loan, the other programs that you all have, maybe delve a little bit more into the 100% program that you have, and any other different things that First Citizens can be able to do, because you guys can. And guys, I want to tell you how I found out about First Citizens having these different types of loans. I was dealing with a VA client who, for all my active military, she was Title 32. I don't know exactly what that means in military terms, but she did not qualify for a VA loan because she was Title 32. And so I had no idea, you know, we was with a lender who was putting her through that, and we didn't find that out until a little bit closer into the deal after being under contract. Well, one of my other clients was a member of First Citizens, and she was like, Angelina, you got to call First Citizens because they have X, Y, and Z here. And I want to say that was the first time we worked together was with that client years ago, to get her into her home. And she did the 100% program, because for those of y'all who don't know, a VA loan does not have mortgage insurance premium. And so she was able to get the same 100% program that I have on this slide here. Did not have to worry about the mortgage insurance premium. And I think also because of her income, she qualified for, I think at that time, y'all had some other type of things of which you had to do as far as with qualifying with good interest rates, but it was comparable to a VA loan. And she was able to get the same 100% financing, no PMI, purchase her home, and we were good to go. Awesome. So you don't have to necessarily be, if you're not qualifying, you may be one of the people who you want to take those benefits, but something is there to whereas you're not able to qualify. You do have other, I guess the main thing is, guys, you got more than just FHA. And so you got more than FHA and down payment assistance programs. You got these types of loans here. You hear what she said, 660. to qualify for 100% of no mortgage insurance premium. And then even if you don't qualify at 659, you still have $5,000 to help you. That does not have to be factored into your debt to income ratio, to your deed, or anything else. It's just strictly on your program. This is awesome.
I mean, it increases purchasing power, and it increases the affordability of what you can buy. You may want to buy more house. You may want to use your money at the design center. There are tons that you can spread the love. So I'm always, if I say, I don't know if you're going to qualify, but to call you and say, hey, you're going to get $20,000 in down payment assistance. Now, for me, I don't know how others feel, but that's like whipped cream on top of your ice cream.
Yes.
That's
that if tells me I qualify for 20 grand. That is that there is just, it's just awesome. It's just awesome. That's, we gotta, I told you to do a part 2. You gotta let me know, and I'll get you on the schedule. We can talk more about that, along with also the collaboration, what we just done with the young lady with the 80/20 loan. Guys, another 80/20 loan. Oh my goodness. If I could, oh my goodness. You all don't understand. I had a client first time here that was like, Angelina, I have got to keep my payments at this. She says, this is what I am. She's by herself. She says, first time young lady. And I don't even know how. And I'm just like, okay, let me call Katrina. I know Katrina has these loans like this that are just different. They have, and she's able to do creative things. And guys, I mean, if you don't mind Katrina just going down the list of what the benefits that she's gotten. I mean, you don't have to go into details, but just from the type of loan, the grant program, and the other program that she's going to be getting, well, that she has, because we closed.
So remember that she got that. So we did community opportunity for her. She was also able to add that 20%. Now the city doesn't give you their 20%. As quoting, you do have to pay theirs back, but that's factored into the loan as well. We were able to add that to the loan, and the mortgage credit certificate we added, as well as the $5,000. So when she walked away, she was very happy that she was able to close on her loan, and her payments were where she wanted them to be. Angelina, I think you may want to elaborate on the fact that that was a City of Columbia loan, but the City of Columbia does not limit you to living in the actual city. This young lady moved to Hopkins because the city, and I'm not going to tell them to go out and look for blue trash cans, but Angelina looks at a map of where we can get someone approved. And the city is not in just the city. The city extends, if anybody is familiar with Spears Creek Church Road, that's the city. That part of that is the City of Columbia. Personal, part of that is the Hopkins, is where that young lady purchased, all in the City of Columbia. So they have some programs, and they're on their website as well. But it's another one of those that we partner with as well. So we do 80%, and the city will gift you that 20%, but that is a repayable amount. But it's at 4% interest rate. So if we're doing ours at 4%, you're doing yours at 4%, you are winning.
Well, and that's the thing when people don't realize, like you said, people think when you hear city programs, that means, okay, that means I need to be downtown, inner city only. Right. Guys, this program, like I said, Spears Creek Road, we even used it off in Harbison, right down the street from Columbiana, in Irmo, in that area. We also used it, like she said, in Hopkins. And this young lady, guys, she got a brand new house with an 80/20 loan, no mortgage insurance premium, so she doesn't worry about anything falling off, $5,000. Now, I'm not as diverse in how the MCC tax credit works, but I know that means she's getting some money back.
Well, it's $2,000. It's $2,000. Yeah.
Is how much? Sorry.
It's
How much?
well, it's $2,000 credit, but over the course of the loan, and what that does for her is we are able to add $166.67 a month for the debt to income ratio to qualify you with that mortgage credit certificate. You can find that on
See,
South Carolina Housing's website.
and see, that's what we're talking about when you have an experienced loan officer such as Katrina, who can really get in and make deals work. To whereas it allows for this young lady to not only qualify for the house of her dream, home of her dreams. We're talking about a 3-bedroom, bathroom, ranch style home, brand new, that her parents are just, ecstatic about, in the area that she wants to be in, with yard, things that she wanted. This qualifies for brand new townhomes that are in the Harbison area, along, utilizing the 80/20 in City of Columbia, and also getting $5,000 in grant money. That's just unheard of. It's just unheard of. But we say these things, guys, and now to put on top of here, the only reason why my client did not use the 1% lower interest is because it wasn't available. This literally just rolled out weeks ago. Other than that, she would have used that. She would have been able to qualify for that. It's just that it wasn't available. So guys, this is brand new stuff that is coming out with First Citizens, of being able to get 1% lower. Who probably joined later on and didn't hear, she had a colleague at First Citizens just lock somebody in at a 3.55 interest rate for 30 years. 3.55.
That's the good old days.
Yeah, I don't know what else to say.
Those are the good old days, right?
The good old day loans from a couple of years ago.
That's right. That's right.
We still say it was good old. We got some great information. We have people who are saying this is great information. We also have people that comment online too, Katrina, while we're here. So I want to make sure I share that with you. And when you were talking about the how the MCC tax loan worked at 20%, this is what somebody shout. That's a shouting moment. Yes. Yes, that is a shouting moment, along with that 20% grant. I'm gonna have her coming back and talk about that too. Well, guys, I want to make sure that I put this up here. Miss Katrina, was there anything else that you want to go over? I know we had so many things. We said we was going to set up another time to be able to get you on here just to discuss your loans. Was there anything else you want to share? Or if not, we can be able to set up another time to have you come back. I would love for you to talk more about your lot programs, because I'm gonna be honest with you, I'm having a lot of people now, family members getting together, and they wanted to do their own subdivisions, with getting developing homes and building homes and things of that nature. And so get land. If you have programs like the construction to perm, we got a lot of people that build jobs. Those are things we definitely want to see. Oh, so I said that you got me ready to sell and repurchase. Well, come on. Hey, we have the team and the knowledge, and that's the thing, guys. For those of you all probably did purchase back when things were super duper low as far as your interest rates, you do have options. Don't think that you have to be held. And I hate to use the term hostage, but this is kind of sometimes what people have told me. They feel like they have no choice but to stay in their home because of the interest rate. You do not have to feel trapped in that home if you are wanting something better. Or not better, bigger, or you want to downsize, or you just want if you just want to get another home. Sometimes there's nothing wrong with your home. You just want something different. You do have options. And this is what it's all about, is being on these Tuesday tune-ins, finding out what's available, coming up with local such as Katrina to find out what they have that's available to get the job done. It's available. It's out there. Okay? It's out there. Because you have this along with putting your equity in from your home. You're going to be in the same position, if not a better position, than when you purchase it those times. So it's just all about thinking outside the box, which if you see these loans are outside the box, definitely, when she says information overload, you don't have to know exactly how they work. She's really great at breaking down the numbers, because that's the main thing. What's my payment going to be? What's my interest rate? How does that affect me over time? Those are the important things. She's good at doing that, to whereas we can get you in that next home and be happy in your next All right. Well, Miss Katrina, I'm going to put your information here. She provided me with a nice, beautiful slide. But I also do have her info down here too that I wanted to make it as well. Guys, if you have any questions, you can also be able to click on that, scan that QR code. That'll take you also to her. That takes you to your site for you to start the application process. If you want to be able to just, sit down and talk with her, like she's local, you could actually sit down in front of her and talk to her in her office. If you would like to have a consultation and not find more about the buyer's process, guys, that's what we're here for as well. You can also go to dealswithangie.com to set up your appointment. You can even reach out to me directly. You can either reach out to me on Facebook for Deals with Angie, Angelina McFadden. I'm here. Miss Katrina, I thank you so very much for coming on. Guys, she was supposed to she was very appreciative with and understanding with pushing this out, because I just unfortunately, guys, my body wouldn't allow me to do it. So I thank you all for your patience in joining us again. If we've had that long time. Miss Katrina, we'll be back on again. So hey, we'll keep you guys posted when she's back on. But in the meantime, if you have more questions and want to know more about these programs, this is her contact information that you see down below. Please reach out to us, and we are so grateful. Thank you so much.
Thank you, and have a good night.
You say, you guys have a blessed one. Thank you.
Bye-bye.
And also, guys, if you're wanting to also recap on any of the Tuesday tune-ins that we have, you can go to our Deals with Angie YouTube page. On that page shows all our different tune-ins, excuse me, still recovering. All our different tune-ins, all our different guests are there. If you want to go back through, because I have clients that have gone to kind of learn more information, you can go there to find them. That way you don't have to scroll through Facebook to try to find everything. If you like me, it's all on our YouTube page. It Deals with Angie. Again, guys, thank you so much for joining us. Till next time, appreciate it.